Headline CPA or CPI projection was 0.4 month on month and 3.1 year on year. As everyone knows, the headline actually came in at 0.4 with a 3.2 year on year. So it was higher than expected. It beat expectations. This is a problem, okay? Core CPI was projected to be 0.3 or 3.7 year on year. Actually, it came in at 0.36 month on month and 3.8 year on year. So both headline and core beat to the upside. They beat expectations. This is a problem. So
is core CPI more important to the Fed than headline?
The Fed is always more concerned about core because it takes out the volatile food and energy. And when you look at core over a longer period of time, it's more indicative of what's happening in the market. But the fact that both of them, regardless of how you slice it, beat to the upside, that's the start of a trend that's not moving in the right direction.
Just to clarify one more thing.
Yeah.
We had high inflation, right? A year and a half-ish ago, like really high, scary high. They had to put the brakes on. Inflation did eventually go down, and we thought that inflation would be going even more down in the last few months,
Bingo.
This month, so that interest rates would potentially go down as well. But the implication is?
The implication is the Fed can't cut now. The implication is everything's still more expensive. The implication is if you look at, the change in month over month, it technically got more expensive. That's the implication. Then we got to dig into this, right? So shelter and energy were really to blame for this red hot inflation number. They made up about 70% of the problem. The shelter index rose 5.7% on an unadjusted annual basis, or 0.4 month over month. Energy prices rose a bunch. See, they'd been declining. And then all of a sudden, the index jumped 2.3% in February after falling 0.9 in January. So in other words, gas and everything else was getting cheaper. Then boom, it bounced up. Part of it was gas. So gas climbed significant 3.8% from January to February after falling 3.3 the previous month. So the Fed, they already started telegraphing this to us. They said higher for longer. They said inflation is sticky. It takes longer to work through the economic system than people want. So what's happening is people like me, investors, homeowners, business owners, consumers, we all thought it was going to happen faster. And then the market started pricing in those rate cuts early. So they're pricing in the rate cut early for March. And when you get this beat to the upside, then they start looking at it on like a 3-month or a 6-month basis.